please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session and it's so far been a steady start to the trading week, holding up with gains of close to about 0.6% on the benchmark indices, up for the third day in a row. In important news and updates coming in from Fortis Healthcare, Hero Enterprise, that's the Munjal Burman Group, have given their nod to reopening bidding for Fortis Healthcare. Remember, they had emerged victorious in that four-way battle for Fortis Healthcare, and we kept getting news flow day after day. And now it appears that the successful bidder, Hero, as well as the Burman Group, have given their nod to reopen the bidding process. So I guess resolution takes some more time, Ekta.
Well, actually, you know, this is a positive which has come through if you look at it from a shareholder standpoint, because the likes of IHH, the likes of Manipal TPG, as well as even the likes of Fortin have been very continuously interested in this entire asset. Manipal TPG, you know, hiked their target, they hiked the target to around 180 rupees per share. We had IHH which renewed the offer as well, and this was after Munjal Burmans were chosen as the preferential bidder. But remember that the board was not unanimous in their decision, and all of the shareholders or all of the board members who had voted for the Munjal bid were actually, majority of them have actually now stepped down from the board of Fortis. So all of the old board members who were present now don't exist on the board of Fortis, and hence there was always a question of legitimacy of that particular decision. So the Munjal Burmans have sent a letter saying that y'all can reopen the bidding process. Most likely it will be preceded by due diligence, which will allow all of the stakeholders to look at the books and then make a fair call in terms of what they think the actual fair value should be.
The never-ending Fortis saga, right, Nigel?
Absolutely. You know, just take a look at that. The street wants it to be reopened. In fact, they want more money. So that's why the stock has popped up. But we've seen numerous times there is supply at around that 155, 160 odd levels. We'll wait by, and we'll try to get you more details on that front as well. No worries in terms of our markets, though. We're sitting with good gains. A 75-point rally is what we have seen. And in the last three trading sessions put together today, we're up nearly around 250 points up. It's the fag end of earnings season, but we had Sarda Energy that came out with their set of numbers yesterday. They posted a very good set of numbers, more or less on expected lines. But to understand further details with regard to what exactly is the way forward, we have with us Mr. Padam Jain, the director of the company. Hi, Mr. Jain. Thanks so much, sir, for joining in. Well, the stock clearly has reacted very, very positively. We did see some selling in the last couple of months, but today, in fact, it's up more than 10%. Give us a few details, sir. What were the realizations in Q4? That's on a blended basis. And as of today, how different are the realizations in comparison to the average of Q4?
The average realizations in fourth quarter were almost 20% higher than the third quarter.
Okay.
Particularly the realizations in case of steel billets and downstream products were better as compared to pellet and sponge.
Okay.
But in case of pellet and sponge iron also price movement was in the range of 15% or so. And even during April also prices remain more or less in line with the fourth quarter. Right. And in case of billets and downstream products, prices have further improved.
Okay, so on a blended basis, you said that prices were up by around 20% on a quarter-on-quarter basis, and as of today, are they mildly higher on a blended basis?
Slightly higher in case of steel, but in case of ferroalloys, prices are slightly on lower side as compared to the fourth quarter, but raw material has also corrected a lot.
Okay.
Okay. Mr. Jain, what was the reason for the weak performance in ferroalloys, and is the situation back to normal now?
Yes, one of the reason is basically, as you are aware, we had shut down one of our power plants. Because of that, we had to purchase power at a higher cost, and production volumes were also on lower side. That had, and because of volatility in the raw material prices, also that also affected to some extent. Now everything is normalized and the plant is operating at full capacity.
All right, so we can expect the EBIT margins of the ferro business to stabilize going ahead?
Yeah, definitely. Current quarter and onwards, margins will definitely stabilize and improve.
Okay. What are the sustainable margins we can work with, Mr. Jain, and any kind of guidance on volumes as well as realizations for FY19?
So far as volumes are concerned, in last year we operated pellet plant in 100% capacity at 6 lakh tons. Current year we are expecting permission to produce up to 8 lakh tons.
Oh.
So that is one major increase in the volume side. That is one aspect that will materially, and with the commissioning of the steel plant, some additional volume will be available in case of steel billets also.
Okay. And
how much would be the additional volumes available for steel billets according to you?
Steel billets, let us see by what time we are able to commission, but maybe we can assume maybe about 25% of the additional volume.
So when you're talking about 6 lakh tons, sir, of pellets, you're referring to external sales?
External sales will also jump up substantially. Last year we had external sales of about 3,84,000 tons.
3,84,000 tons of pellets?
Yeah, of pellets. This year it should be somewhere, if we are able to get the permission, it should be more than 6 lakh tons.
6 lakh tons. Okay.
So, there will be almost a 50% jump in the pellet sales volume.
And what about pricing, sir? Pellet prices have gone up so much. If you're going to produce more, various other producers are going to produce more, then do you believe those prices will come under some pressure? Because pellet prices, they have gone through the roof in the last 1 year.
Yeah, in fourth quarter, in the initial period, it had gone crossed 7,000 also. It had gone up to 7,500. Later on average, the realizations have been, in the fourth quarter, it has been 6,000 plus, 6,200 something.
So currently it is...
are presently 5,800, 5,900.
Okay.
So, but recently, as you are aware, this NMDC has again increased the prices of iron ore. So ultimately, price parity will be there, but yes, we definitely feel that there will be pressure on the pellet prices.
Okay.
Okay, some pressure on the pellet prices. What's the overall debt on the company's book? What is the plan with respect to any kind of debt reduction? Would you look to refinance your loans?
Our overall consolidated debt is about 1,060 crores.
106, okay.
And it will remain in the range of that level only because some new projects are going on. So whatever we are paying back, to that extent, certain borrowings will be there for the new ongoing project.
And what
it should remain in the range of 1,000 to 1,100 crores at the long-term loans.
But what kind of what was your borrowing cost in the last year? You were talking about refinancing it during the year when you joined us.
Part of that was refinanced in the last year. That time our project average cost was somewhere about 10.5%.
Was how much?
10.5%.
10.5%. Okay. Yeah. All right. Sir.
And there may, because recent there has
no,
been
Mr. Jain, the reason we ask you this is because you were talking about refinancing your debt. Your debt didn't go up as well, but still your finance cost went up to 97 crores. Why?
No, the reason is that we have commissioned this one-off power plant. That has come in the profit and loss account. Last year it was not there.
Okay.
So because of the commissioning of power plant, we have incurred about 11 crores of additional interest on that particular project, and there are volume increase. So there is working capital cost has gone up in case of subsidiaries.
All right.
There has been 40% volume increase in Sarda Metal.
Okay.
So that also had some bearing on the interest.
Mr. Jain, your stock has fallen 40%. Today we are aware it's up nearly around 15% because the street likes your numbers. Any temptation of the promoter to go ahead and buy some stock from the open market? It was more than 600, 650 rupees just a couple of months back. Now the stock is still 435. Any intent of the promoter to increase some stake now?
Promoters are already holding more than 72%. They don't have much of the leeway.
Okay.
So that is always there.
All right.
Okay. Thank you, Mr. Jain, for joining in. On that note, we'll slip into a very short break with the news that the mid-cap outperformance continues. So the advanced decline ratio is quite healthy now. 3 stocks in the green for 1 in the red. And keep your eye on Jain Irrigation. Huge runaway rally in that stock, now up close to about 15% as we speak. Since it came out with its numbers, I think that time the stock was hovering around 410, or just last week it was hovering around 410, and now it's approaching that 580 mark. No, Jain, I'm sorry, Just Dial is the stock that I was referring to, which is now up close to about 15%. The intraday of Just Dial as well as the 1 week chart of Just Dial will be up for you on your screen.
few stocks in the broader markets. GNFC, now the stock is up nearly around 4.5%. So keep an eye out on that one. Remember, TDI prices were cooling off, but now acetic acid prices, they have gone to near decade highs. Remember, GNFC produced nearly around 115,000 odd, and that explains why, in fact, that stock has moved to the high point of the day. It's one of the only producers of acetic acid in India, and that's why, in fact, that stock is moving higher as we speak. But
I think there's some news on Reliance Communication tomorrow. The NCLAT will be hearing Reliance Communications' appeal against the NCLT order, which had admitted Reliance Communication into insolvency on account of a plea by Ericsson. Yes. So basically, Ericsson wanted Arcom to get into insolvency. The NCLT had given its approval for that. Now Reliance Communication wants a stay on that, and therefore it had appealed to the NCLAT, and NCLAT will be hearing that tomorrow. So that's going to be crucial. And now the company in a release has also indicated, they've just sent that to the exchanges as well, that all the lenders, including China Development Bank, State Bank of India, Standard Chart, have been formally impleaded to the appeal proceedings. So basically, they too are backing Reliance Communication to say that we don't want the company to head into insolvency. The key reason for that is if the company goes into insolvency, then the asset sale to Jio, which is at 18,000 crore rupees, gets stalled. And under IBC, there is a probability Mukesh Ambani will not be able to bid for those assets on account of being a blood relative. So it puts the entire debt reduction plan of the banks in jeopardy, which is why even the banks are supporting Reliance Communication. They want the asset sale to Jio to go through in order to reduce their debt. So tomorrow the NCLAT will be hearing that, and you know, all the banks and the financial institutions have unanimously decided to oppose the NCLT debt resolution process.
Okay, all right. So we'll keep an eye out on that front. But moving on, IDBI Bank is in focus after the company posted a weak set of earnings this quarter. The bank's net loss widened while the quarterly slippages came at its highest levels we have seen in the past few quarters. My colleague Ritu Singh caught up with Mr. Mahesh Kumar Jain. Let's hear out what they had to say.
Operating profit has increased, which is basically a core business profit. NII we are able to retain. NIM we have increased by 19 bips, and we have increased the operating profit by 71%, and including the core business 12%. The credit cost is there because of the legacy issues and because of the stress in the corporate book. And that credit cost, 17-18, most of the part we have already recognized. The some part may continue in this financial year. Post September 18, we should look forward.
September 2018?
September 2018.
So what gives you the confidence you'll be able to return? You know, you have 28% gross NPA levels at this point. It's one of the highest in the industry. How will you bring it down from this levels?
Basically, there are various accounts which are under NCLT resolution. 11 account we are having in the first list, where the total exposure is 15,000 crore. And that 15,000 crore will get resolved either way in this quarter or the next quarter. Okay. So that 15,000 definitely is going to reduce the gross book. Then in the second list also, 9 accounts has already been admitted. We are having total exposure of 11,000 crore. So total 26,000 crore of exposure will get resolved by the end of this financial year.
You're also looking to sell a large portfolio of non-performing assets. Could you tell us about that? I mean, what kind of, are they power assets? Is there one particular sector, or are they NCLT accounts?
These are basically the mix of various large corporate book, which we identified that there can be a reasonable value which we can fetch in the market. We identify around 21,800 crore of exposure as an NPL book to put out on sale in the market. In a couple of weeks, it will be put out on sale, and then we have to run the process. To what extent we will be able to recover, it depends upon the pricing, mutually agreed pricing, and depends upon the market appetite also. If the market is able to absorb those exposure, then definitely we will be reducing our NPL book very quickly and fast.
So could you give us a target? I mean, considering this portfolio sale that you're undertaking and the resolutions at NCLT, what will be the recovery this year that you're targeting?
As far as sale of asset is concerned, 21,800 itself is put out around at more than 10% of the loan book. So from 28%, it may come down to 18% if entire book is going out from the bank's book. And remaining 17,000 crore, as I told, that we are expecting a resolution in NCLT during this financial year outside whatever we have put out on sale. So that itself is around 8 to 9%. If God willing both these two things are happening, in addition to the normal recovery and upgradation, which bank will continue to do it, in 17-18 our recovery and upgradation was higher than the 16-17. This financial year also our recovery and upgradation will be higher than the 17-18 number. So with that there will be reasonable amount of reduction in the gross NPL book if these things are fructified.
So what is your capital requirement for this year? Because you have large amounts of stressed assets. There are more companies that will be heading into NCLT. You're also under the prompt corrective action. So what is the requirement and how will you be meeting it?
As last year 17-18 we put out the strategy that we will continue to re-zig our portfolio and reduce our risk-weighted assets. We have already reduced our risk-weighted assets. We will continue to reduce. Non-core asset also we will sell it out to meet our capital requirement, and whatever will be the deficit number because of the credit cost which may continue because of the aging provision, that definitely we are going to meet out either coming in the market for raising the capital at the appropriate pricing.